Good afternoon, everybody. It's Scott Gillum with the Stock and Options Trading Suite. Today I want to give to you a trade that I have put on in our subscriber base as a defensive play on these last 2 days of big moves up here on the SPX, or the SPY that I'm going to use. So you can see that we had the gap up and come back to a doji yesterday, and today we're trying to hold on to that lower level from yesterday's gap. Here's the trade setup. I've got two Fibonacci's for you. One from the April low to the high that we hit yesterday. Now that doesn't give me a lot of information other than this consolidation area here between the 38 and the 23 fib. And that's around that 532 level. Tightening up this Fibonacci to use the flush low from May 31st, the end of the month, to that big rise that we had up until the 11th, a couple of days ago, and then the gap up high after we had the FOMC meeting. We now have a swing high and we've got a swing low to take a look at. So our pushback or pullback to that 23.6 gives us these last couple of high points on the SPY at the 537 level, and that's where I'm going to target our protective portfolio trade here. You can also see the 8 EMA is down there at the 37 level, and the 21 is quite a bit lower, but that's a lagging one down at 530. But that becomes my point that I want to use. So let's go to the trade setup. Now, in the trade setup, I'm going to look at the July 19, the monthly options for my short side. I want to give it some time to come back down. So I'm looking at that 528 level. There's 530 at the 21 EMA. So a little bit below that gives me the 61.8 at the 528 level. So if we go through that, then we've got things going our way, but I want to step aside on that 28 by adding, let's go to the next trade, I want to add this 530 out in August. So the 530 comes into play once again right at those low points that we had for our big move up. And if I buy the 530 and sell the 28, I have a non-margined put diagonal that, if I take a look at the curve, costing around 248, 250. It's fluctuating now. Our break even, well, our break even on the upside stops at around the 550 level. So then I've got to take the trade off. On the downside, if we move back through the 530, back through the 528, we now start to get to the reduction in valuation as we break back below our short 528. So here's the play. August, we're going to buy the 530s. To July, we're going to sell the 528s. If SPY should reach this 528 level, down here at the, or 530 level, let's put it that way, at the 21 EMA, and start to go further south and the pullback becomes more evident, we can take our short 528, which should be worth less because time is eroded, and we can roll it down and down and down. But all along, our long put at 530 will be gaining in valuation. There's another play on this trade, and that comes from not having as we have here, we have negative delta making money for us on a drop. We've got positive theta, so if nothing happens day after day, we still increase our valuation. But the one thing that we haven't talked about is this implied volatility. Now I'm going to go back to the charts. Volatility right now, sitting here at the 12 level. Any increase in the nervousness of this market, going from 12 to 13 to 14, would improve our return drastically, as the SPY and the rest of the market would accelerate the downside move. Therefore, our long call is going to get more valuable to us, and our short call, with time eroding, is going to kind of stay the same, with a potential to having us have a full max return of about 2 to 1. So there you go. SPY, defensive put, diagonal, July short, August long.
Hi there, this is Scott Yellow from the Stock and Options Room of Live Trading Suite. If you enjoyed this video, please hit the like and subscribe buttons down below. And if you'd like to trade live with me in real time, click again that link in the description below. Good trading to you all, and I'll see you in the room.